Welcome to the Business Outlook Survey press conference call. My name is Catherine Dibbling, Public Affairs Specialist in the Federal Reserve Bank of Philadelphia. And with me today is Mike Trebbing, Senior Economic Analyst in the bank's Research Department. And today we will take questions from reporters about what our manufacturers had to say about business activity in their firms in November. First, Mike will give a brief summary statement. Mike?
Thanks, Kathy. Our monthly regional survey of manufacturers suggests that activity fell back from the levels achieved in October. In particular, the indicators for change in general activity, which had reached positive readings in October, moved back into negative territory this month. Indicators for shipments, new orders, and employment were slightly negative this month, suggesting the weaker conditions. The impact of the recent storm associated with Hurricane Sandy had significant effects on activity at the end of October, and responses to special questions that we posed suggest that the effects for many firms lingered for some time, but most firms suggested that the impacts could be short-lived. Future indicators reflecting the firm's outlook over the next 6 months were mixed, but still positive for most measures. However, the past few months have seen a weakening in indicators for future employment and future capital spending in particular. Many firms' comments beyond those received about the storm's impact stressed uncertainties about the fiscal decisions lying ahead.
Thank you, Mike. Do we have a question?
Mike, can I ask you just to repeat that one sentence slowly about the impact of the storm?
Sure, that the impact of the recent storm associated with Hurricane Sandy had significant effects on activity at the end of October, and responses to special questions suggest that the effects for many firms lingered for some time later, but most firms suggested that the impacts could be short-lived.
Okay, questions. Katie Etter, NJ Biz.
Hi, Mike. How are you?
I'm good.
Good. What did you expect in the results if Hurricane Sandy hadn't hit? Were you expecting all the levels to be positive like they were in October, or what did you just have going into it?
Well, we had asked questions, I guess, several months ago about their expectations for activity in the fourth quarter, which were indicating, pretty much flat activity or slight declines from the third quarter. So the only, indicator we had of what to expect in the numbers for the remainder of the year were based upon that question. Otherwise, we really don't try to speculate about what the new numbers are going to show us. We know at the end of the year, there are some seasonal elements in December in particular that we are a little more difficult in reading the numbers. But beyond that, I didn't have any expectations about the storm's impacts.
Okay, thank you.
Mm-hmm.
Question, Steve Goldstein.
Yeah, pretty similar, but I was just wondering if you could talk more about what you're seeing the impact from the fiscal cliff in terms of activity right now, as opposed to just, you hear a lot of people talk about, well, we're uncertain, but do you see that impacting some of the orders or shipments?
Right. I mean, we received a lot of comments this month about the storm, but we really focused their attention on that. But we received the usual commentary with the regular responses to the indicators about the 6-month forecast and general comments. And about 2/3 of our responses came after the election, if that makes any difference. But there were more comments this time about the national fiscal elements of their forecast. And sure, there were comments in there about uncertainties about demand and in some cases weaker capital spending activity on their business. So although we received ample commentary about the storm, we did pick up on this increased emphasis on the fiscal uncertainties. It's hard to say how much that weighed into their responses, but in general, they held up fairly well from the previous month, the 6-month indicators. But we've noticed over the last 2 months at least the slight weakening in the employment forecast and I think a negative reading on the future capital spending indicator this month.
Sorry, the negative reading on the capital spending percent.
Right.
Okay.
You know, it didn't change too much from last month, but you know, there has been some weakening there over the last few months. It was negative actually it was negative last month as well. Not a whole lot of difference, but weaker numbers over the last 2 months than we had seen before.
Okay, questions? Ellen Froelich, Reuters.
I already did mine, thanks.
Okay. Follow-up questions? Katie Etter, NJ Biz.
Sure. Hi, Mike again. Was there any indication in this month's results that Hurricane Sandy will continue to have an impact on manufacturers' outlook in coming months and even with their 6-month outlook going forward?
You know, what we asked was very similar to what the New York Fed asked. We asked about the number of days that they experienced weak activity or weaker activity, and the average response was about a little over 2 days. But we also asked them about the number of days they experienced severe crippling of operations or complete shutdown, and that was about 1.3 days. Only about less than 10% of our firms actually come from the New Jersey area that was harder hit. Most of these are coming from Pennsylvania and a smaller fraction from Delaware. But we did note from another survey and from talking to firms that the firms that were located in New Jersey had larger, longer periods of disruption than firms in Pennsylvania, which is not too surprising. We did also ask them about the kinds of effects, and at the top of the list was the inability of workers to get into the plants, which caused the slowing in activity. Very few firms indicated major losses in capital equipment or plant, and electrical outages were also high on the list. But most of the firms were optimistic about recovery from this, and in most cases making up for lost production during the storm. And there's always some firms that will actually benefit in terms of the stuff that they're buying for recovery from the storm. So not a whole lot of evidence about how it's affecting their overall outlook for business, except that they're weathering this disruption from the storm.
Follow-up questions? Steve Goldstein.
No, I think my question was answered. Thank you.
Okay, any more questions? Okay, thank you. You've just been watching November's Business Outlook Survey press conference call. I am Catherine Dibbling, Public Affairs Specialist with the Federal Reserve Bank of Philadelphia. With me today has been Mike Trebbing, Senior Economic Analyst in the bank's Research Department. The Business Outlook Survey in December will be released on December 20th, Thursday at 10 a.m.